Hello everyone, I hope you're okay. Let's start our learning and analysis for for tomorrow, which according to my time here, it will in a few minutes. Uh, so it will be 12th of February 2023. Sorry, I have been really busy. I couldn't upload any analysis very often. So let's start going with the Forex Factory. Let me share my screen with you. So tomorrow we have JPY have bank holiday and Chinese Yen has bank holiday, and we got heavy impact on GBP, mid impact on US dollar, uh, 5 p.m., which is UK time. So make sure you whenever you trade, you uh, look your times accordingly. Right. As you can see, this is at 11:45, 11. Let me share, refresh this, and it will be same as my computer time. Right. So that's for the Forex Factory. And going to gold. Let's see what's happening here. Starting with monthly time frame. This is an area which was broken. So in monthly time frame, I want to see some good bearish candles here before we can expect some bearish move to the downside, or even some weekly candles that will make us make bearish. We can look up for a bearish setup. That's for monthly only. And for weekly, similar situation. That's we need to see good candles here going down with good momentum. Then we can look for a bearish setup further to the downside. And also you've seen that market is rejecting from the top in weekly. Although it did break this level, and after that, uh, taking all the liquidity, it's becoming bearish. And currently, it's standing at this level, which was broken initially to go to the upside. So that's the situation in weekly, and let's see what's happening in daily. Let me remove all these lines. Daily, you can see the market is making higher highs, and then this is a retracement, this area, and this is another level here. So if this level is broken, we'll see. Consider the market is in bearish mode in daily. At the moment, in daily is going to the upside. Right. It's highly likely the market can retest this level again and make a wick here and come to the downside or to the upside this way. That's in daily. And 4 hour, we're generally interested in 4 hour for day trading. So where's some levels here? This level we have, another one we have this level. These are the levels. In fact, if I draw areas that will make more sense. Right. In Forex, market has rejected from here. In fact, it took its liquidity from this level here and closed inside again. And now, because the market was bearish, it's so we still can expect market come to this level here and give a rejection from there and then probably come to the downside. So in 4 hour, we also have this level. So because it has liquidity on top of it, the stop losses. Liquidity is basically the stop losses are orders uh, which are so market goes to the upside, hit the stop losses, which are the basically orders, and they are buy orders. A stop loss here means a buy order. Sorry, it means a sell order here on top of it. Market goes to the sorry, it means a buy order, not sell order. Market goes to the upside, and the buyers are here on top of this, and because market will go to the upside, take these orders, buy orders, and then go to the downside. Or in other words, hit the stop losses and then go to the downside. Take the liquidity, basic liquidity or the orders. So every stop loss here will be classed as a buy order. Take the buy orders and then sell. For every buy order, there should be a sell order. For every sell order, there should be a buy order. So that comes in forms of liquidity, stop losses, liquidity, which are the stop losses or orders, basically. I hope this makes sense. If it doesn't, please do comment, and I'll explain more what liquidity is and why it's needed to run the market. Right. So I hope this makes sense to you. So these are some important levels. Sorry, like the market still hasn't tested this. There's a fair value gap here. And you can see in 4 hour the market making lows. The 4 hour market is bearish. We definitely can expect here. It may be in the form of going up here, there, or then coming back straight, or even without going there, it can come down. So that's 4 hour market structure. And let's see what's happening in 1 hour. The good buy trade will be here on the market, change of market structure in smaller time frame, possibly, or liquidity hunt from here, which is a good level here, this level. That will be the buy trade, and sell trade possibly from this around this level, or this level. So that will be sell trade. And we can further refine in 15-minute time frame. So at the moment, this is I would not suggest to take any trade. The trade if you already taken the trade on Friday from here, that was a equal lows. You could have taken trade from here. Let's look for in 5 minutes how the market behaved on this level. Let me put a line here. The market touched this line. In fact, let me delete everything and then I put a line here. Right? Market, in fact, didn't even touch this line. There's a few pips. Oh, so what happened? As you can see, this 5-minute chart, rejection, double bottom, rejection. That was our sell opportunity here. And market went all the way to the upside. That was a buy opportunity and to the upside. Market rejected from this level. And this is all liquidity hunt, smaller time frame. As you can see, this range was broken 5 minutes. Market went to the upside. So remember, one range is broken 1, 2, 3, 4, 5. And this, if you count this, it will be 6. So these are basically 6 candles. It was broken, tested to the upside. And that is a level. We're at this level as well. And now market is ranging. Going into 1 minute. See your market behaved in 1 minute. It's on a level to the upside from here. See how the market created liquidity here in 1 minute. 1, 2, 3, 4 candles. These 4 candles were broken. The downside. Market took the liquidity. Some people thought it's a buy from here. So they took liquidity, took all the stop losses from here and then from here. And went to the upside. And look what kind of pattern here is. Kind of reverse hard shoulder. Reverse head and shoulder, yeah, is similar to that. So again, market went to the upside and because it was a head and shoulder, we did see some move here. The market reversed again. Made double bottom here, went to the upside, then triple bottom. That's 1 minute chart. Now W pattern. You can see it's W pattern. Now this part of W has been tested. And also it's a level here as well. So you can this, rejection from here. Well, did see the move to the upside, right? And at this move, we should expect to break this level. And it we did retested here. The next level were here, broke, retested this level, especially with this candle, and market tried to go up, but didn't, failed. Now to the downside, and market it was a level here. That level didn't work. So this next level was this one. And reaction on this level here. Market came down, tested this level, and to the upside to this level. Yeah. Now market is tested this level. To the upside and testing this level here. In fact, created liquidity. It created liquidity here as well. Now tested this level, hunted this liquidity, and this liquidity here was hunted. This new session started here. And then after hunting this little market went to the downside. And now I'm expecting to the upside and further. This is the 1 minute chart. Yeah? So I hope this is helpful. All you have to do, just when you trade, make sure you book some profit according to your risk management strategy and probability, everything you have to work out how your probability will be this for that particular trade. Because you can't just book full profit or partial profit according to, without consideration of your strategy. So that's very important. So that's it. I mean, I hope this is helpful, and we'll always go to 15 minutes. Look in 1 minute again. Let me show you something. 1 hour trades range is broken. This it's a liquidity creation created over here is taken. Similarly, these candles is broken to the downside. The liquidity here. So basically, what the market does, it creates support or resistance or range in smaller time frame as well for the liquidity creation. See, market went to the sell side, and now it it even could come here, but it just reversed back, took this liquidity to the upside. The liquidity basically normally stands where the stop losses are. Uh, as I said, these are the orders which market. For every buyer, there should be a sell order. For every sell order, there should be a buy order. So that's why market, this is a very important concept. That's why market has to um, take the liquidity before, take the orders before giving the move. And that's where the liquidity providers come into action as well. If there's no market order, then the liquidity providers provide the orders. So I will explain in one of the videos more about liquidity. So I leave this. Sorry, it's been a long video. So I hope this is useful, and thank you very much. Bye bye.